Welcome back, and joining us on the show now is Peter McGuire. He's CEO Exim Australia. Peter, hi, glad to have you. It really is about the crude oil prices where we have seen volatile moves. While the last 2 weeks were on the positive side, this week has been volatile the last couple of days that we've traded until now. The Red Sea concerns are back and forth. We also are looking at Russian maintenances coming in. That has been supportive. But how would you look at the demand from China? I think that's one factor. And then there's geopolitics. And between that, the crude really seems trapped.
Exactly, Manisha, and that's exactly it. I mean, demand from China. We've got differing sort of opinions, and they're saying that internal demand is relatively okay. Though, at this time of year, we would have thought maybe it could have been a little bit hotter as far as consumption. But then you're looking at the geopolitical concerns, and they really are starting to ratchet up, and that's the unknown and how that impacts as far as price. We all understand the premium that would be built in. And are we going to see what we saw in October if things start to escalate with the Red Sea and shipping and all of those concerns?
Peter, what's your sense on the prices going forward from here? Because not too many people believe that we are going to see much higher highs from here. But between 80 to 85 is how we seem to be trading right now. How would you look at this quarter now?
Well, exactly. I mean, that's what everyone's got an opinion. We're two months out, and it's had a nice little rally to the upside over the last, say, week and a half to 2 weeks. Where it runs from here, Manisha, I wouldn't be surprised, possibly 85 to 90 over the next 2 months, because I think there's a degree of uncertainty. That's if it materialises in the sense of geopolitics and how that all factors in, because we've got so many different hotspots that are creating turmoil or tension across the crude complex.
How would you also look at the US elections coming in? Because that's going to be yet another thing where all eyes would be on crude.
Absolutely. I mean, November 6th, we're a long way out, but really only 9 months. And again, what happens? We've got other issues as well with the SPR, if they need to be topped up. So that'd be a real drain as far as crude pricing. I think that'd really push it higher if you got into some sort of hostility with the US is concerned. So there's something you need to keep on the radar. Secondly, that 9-month build, and everyone's saying, well, righto, is it going to be a quiet lead up? But it's a very contentious situation, Biden versus Trump. So each camp has got a differing opinion as far as economic growth and global stability.
How would you also look at the natural gas prices? Because the last year's high is something that the street is way far away from. And with the way the winter has been, ongoing, there isn't a lot of support from that too.
No, exactly. I mean, it's been a little bit soft and it's washed out. And I really thought it might have moved to the upside and had a really big move. But it's been nothing really there as far as surprises. But remembering that can happen anytime in February or March with weather outages and all of those sort of situations that can really impact gas. So at the present time, we've just got to see how it all moves, and I'm looking forward to seeing what happens Thursday with the OPEC meeting also.
Oh, well, yes, the FOMC meeting begins today and the 2-day meeting concludes tomorrow, and then you have the OPEC meeting on first. So, yes, it's going to be quite a loaded week in that sense. But I also want to talk about the Hong Kong court now talking about liquidation of Evergrande in China, and that's a big news, really. One, its impact that you see on crude and the metals as well. I mean, that is another sector which hasn't really been able to keep on.
Well, exactly. You've got the other side, of course, and that's what blazoned across all the news channels as far as with the Evergrande liquidation. What happens? Will China embrace that, or are creditors going to be left holding a very, very slippery baby? So there's the thought of how that all moves forward, and then from a debt structure. And so then the second part is the overall situation. We understand as far as property sector, and then you're looking at base metal demand internally and so on. So, yeah, I think there's a lot to play out over the next couple of months regarding not only Evergrande, but the Chinese property market.
And how would you look at that impact on metals? Because we did see a knee-jerk reaction on the higher side from metals when it was the RR cut that we saw coming from China. Right. And even as there are assurances and pledges of more support going through, we haven't really seen that, weave its way into the prices.
Well, you had two moves last year as far as support from the PBOC, just as far as stimulus. We've got one already in January, and I won't be surprised to see a couple more certainly by May. So there's the first part of it. Naturally, that goes across as far as base metals and really the engagement back of China. So, yeah, there's so many components to these as far as commodity sector, what's going on with demand globally, Manisha, and of course the internal situation with property and a falling knife in the sense of the CSI 300. It's down 1,000 points in the best part of a year.
Oh, well, metals is one sector, Peter, which isn't really taking much cues from the Red Sea as well, even as there are various commodities stuck, free charges going higher and delayed, sailings. We haven't really seen metals take any bullish cue from anywhere.
No, we haven't. Certainly not. It's been pretty much washed out in a lot of ways. Gold's had a little run up, 2050, but even that's I thought that you may have seen a little bit of move to the upside. I noticed your comments the other day as far as jewellery demand in India, and it was just really takes everyone by surprise in the sense of the overall demand picture. So it's very, very strong, and I don't think that appetite's going to wane anytime soon.
So what's your sense also on the gold prices then? Because as you said, 2000 and 2050, it seems to be getting stuck within that $50 range.
Yeah, it's in that band, Manisha. It just doesn't seem to break out on either side. I can't see it getting under 2,000 anytime soon. But, hey, we're keeping a close eye off Fed, what's happening with central banks and policy, and do we see some sort of reprieve from high interest rates, and even that's starting to, lose a fair bit of momentum. So, yeah, I think that gold will have a run. I just don't know when. But if it's got geopolitics strapped to it and a couple of other things, then it'll all happen and it'll all move it to the upside quickly, I'd say.
Okay.
All right, Peter and Manisha, thanks a lot for joining in and speaking to us about the commodity markets. Let's take a quick break on that note. But on the other side of the break, we'll continue to get you a lot of market and stock-specific action. Stay with us.